Hi there and welcome back for another Market Glance, a Forex Outlook brought to you by Dukascopy TV and Investing.com. Now we start this report off with a look at Forex, and last week it was time for the US dollar to shine. Fresh off the data release showing the American economy growing at its fastest pace in 2.5 years, the dollar rose to 6-year highs against the yen and a 14-month peak against the euro. Sterling was another currency to fall against the stronger dollar, as the pound-dollar pair went down by 0.44% towards the end of last week. However, against the single currency, the pound was near 2-year highs, reaching 0.7806. All three commodity currencies couldn't escape the fate of weakening against the dollar last week. The Aussie dollar pair was down 0.29%, Kiwi dollar pair hit 1-year lows, and dollar Canada was up by 0.44%. The highest levels seen since March. The dollar could see an even bigger boost this Friday as non-farm payrolls data is released, and most will also be keeping a close eye on Thursday's ECB meeting. Despite solid gains made in the US markets on Friday, Hong Kong shares have dropped at the start of the week as the pro-democracy protests continue. Falling 1.4%, the Hang Seng Index had previously been rallying, hitting a year-to-date high of 25,317.95 on September 3rd, but since then has fallen 6.5%. The campaign for a free vote isn't waning, despite police using tear gas over the weekend. Unsurprisingly, US stocks rallied following the US GDP expanding to an annual rate of 4.6%. The S&P 500 rose 0.86% and Nasdaq Composite rose 1.02%. The GDP release gave more support for those who expect an interest rate hike to come early next year. Elsewhere, Australian stocks fell 0.9% and the Nikkei is nearly breaking even for the year as it rose slightly by 0.3%. Next up, as we take a look at commodities, it's the US GDP data that's had the biggest impact here as well. Gold prices have eased even further at the start of the week as investors expect the dollar to continue to stay strong. On the COMEX, gold futures for December traded 0.08% down at $1,217.8 a troy ounce. A strong dollar usually causes the price of gold to drop as it isn't as appealing as an alternative investment. Additionally, dollar-priced commodities become increasingly expensive for purchases with a foreign currency. The current interest rate expectation is also bearish for gold, not only because the dollar is expected to be stronger, but the precious metal struggles to compete with yield-bearing assets when rates are on the rise. Friday's NFP release will also be closely observed by gold traders as it could impact the US dollar even further. And we end this report with a look at oil futures. Once again, positive US data helped US crude oil futures towards the end of last week, as an accelerated economy would most likely increase demand. Whereas Brent oil futures ended flat, and the gap between the two is now the smallest it's been in almost a year. Crude oil was up 0.96% and settled at $93.39 on Friday. Brent continues to be pressured by worries over global supplies, alongside sluggish demand from Europe and exports from Libya and Iraq increasing. It remained almost unchanged at $97.02. There was an unexpected fall in US crude stockpiles last week, dropping by 4.27 million barrels as imports decreased. The imports fell by 1.24 million barrels a day to 6.87 million, the lowest levels since May. The reason being the domestic shale boom continues to affect demand. Well, that's everything for this Market Glance. Thanks for watching and make sure you tune in next week. Goodbye.